82% of homeowners with low mortgage rates feel locked in to their current homes. But here's what nobody's telling you. Most of them are wrong. If you have a 3% mortgage and think you can't afford to move, you're probably making the same costly mistake that keeps millions of families stuck in homes that no longer serve their lives. I'm Jonathan Wilson, your mortgage advisor here in Tennessee, and today I'm going to show you the 3 critical numbers that determine whether moving makes financial sense regardless of your current mortgage rate. We're going to actually look at the real math. First, let me cut through the emotional noise and give you the facts that most people never hear. Fact number 1, home values have increased 63% over the past 5 years in Tennessee. From 2020 to 2023, median prices jumped from around $250,000 to $360,000. That's over $100,000 in just 3 years. But if you bought before 2022, you likely have significant equity and you may not be factoring that into your decision. Think about that for a second. If you bought a $300,000 home in 2020, it might be worth $490,000 today. That's nearly $200,000 in equity that could completely change your moving equation. Fact number 2, most buyers expect to live in their homes for 15 plus years when they buy, but they actually only stay about 8 years on average. Why? Life changes. Housing needs change. Ignoring that reality costs you more than, in a lot of cases, than a higher interest rate. Here's the thing, whether you admit it or not, there is a good chance you'll move eventually anyway. The question is, will you move when it makes sense for your life, or will you wait until you're forced to move at maybe the worst possible time? Fact number 3, most people think about moving the wrong way. They only compare monthly mortgage payments instead of looking at the complete financial picture and what staying put actually cost them. Here's what happened when I ran the real numbers for a client in Murfreesboro. They thought moving would cost them $800 more per month. The actual increase after using their equity strategically, $180. That's the difference between impossible and completely manageable. But here's where it gets interesting, and this is where most people stop thinking. Stop guessing about whether you can afford to move. Here are the only 3 numbers that matter, and I guarantee at least one of them will surprise you. Number 1, how much equity you have in your current home. Your home value minus what you owe. This money can go towards your next down payment, which directly cuts down on how much you need to borrow. Now, here's what most people miss. You don't need to use all of your equity. You just need to use enough to make the numbers work. For example, if your home is worth $400,000 and you owe $250,000, well, that's $150,000 you could put to use. Put $100,000 of that towards your next home, and you just saved roughly $600 or $700 per month in payments. Then you can keep the $50,000 for moving expenses, repairs, or just having some peace of mind. But equity is just the first piece of the puzzle. Number 2, what moving really costs. Don't just compare mortgage payments. Add up everything. The repairs that you're avoiding, gas money you'll save, what utilities are, property taxes and fixes you won't need to make. I had a client who was spending $700 a month on car payments and $300 a month on credit card minimums. When we used their equity to pay off that debt and factored in everything else, their higher mortgage payment actually saved them $200 per month overall, and they didn't have that high interest debt anymore. Okay, this is where the math gets really interesting, because now we need to look at the third number. Number 3, what staying put actually costs you. What is living in the wrong home costing you? Longer drives to work, not enough space, bad schools, family stress. These things cost real money and possibly real happiness over time. If you're driving an extra hour each day instead of 20 minutes, well, that's 250 plus hours per year sitting in your car. What's that time worth to you? What about the stress on you and your family, the missed opportunities, not being able to get to your kids' sporting events? Here's a real example. I had a family staying in their starter home because they were afraid to give up their 2.8% rate. The dad was commuting an hour to work each way on a good day. The mom was working from their bedroom because there was no office space in their home. Their 2 kids were sharing a bedroom and fighting constantly. When they calculated the real cost, his gas, wear on the car, the lost productivity from working in a bedroom, even the marriage counseling they were considering because of the stress, staying put was costing them nearly $800 a month in ways they never even calculated. Now, here's what's really powerful about these three numbers. Once you know your three numbers, you have multiple ways to make moving work that most people never really think about. And this is where it gets exciting, because these are strategies I use absolutely every week. Strategy number one, use your equity strategically. Take your home's equity and put it towards your next home to keep your payment down. One client I mentioned used $120,000 from their home sale to keep their payment increase small, even when going from a 3% rate to a 6.5% rate. Here's the advanced move. You can also use equity to solve other financial problems at the same time. Which brings me to strategy number two, paying off debt when you move. Use your equity to wipe out credit cards and car loans when you move. I just helped someone pay off $45,000 in debt this way. Their total monthly bills actually went down $300 even with a higher mortgage rate. Think about this. If you're paying 22% interest on credit cards and 8% on car loans, but you can get a mortgage at 6.5%, you're actually saving money on every dollar you use to pay off that high interest debt. Strategy number three, turn your current home into a rental. Keep your 3% mortgage and rent out your current home. If the rent covers your mortgage plus some extra, then you're making money while living in your new home. I had a couple in Nashville do exactly this. Their 3% mortgage payment was $1,800 a month. They're renting it for $2,400 a month. That's $600 in extra income every month that helps them cover their new mortgage payment. Now, this strategy isn't for everyone. You need enough equity for a down payment on your new home without selling. But when it works, it's super powerful. And these aren't just like fancy tricks. These are real solutions I use every week with people who thought moving was absolutely impossible. Here's what I've learned after helping hundreds of families make this decision. The homeowners who feel confident about their choices are the ones who do their homework. They plan strategically. They make decisions based on their complete life picture, not just their mortgage rate. Your 3% rate is a tool, not a trap. The question isn't, should I give up my low rate? The question is, what's the smartest way to use my current position to get where I want to be? And here's something a lot of people don't realize. The Tennessee market is actually working in your favor right now. We have steady appreciation, we have strong fundamentals, and reasonable home prices compared to markets like California or New York. Your dollar goes much further here, which gives you more options. Now here's the key, and this is what separates the people who move successfully from those who stay stuck. You have to stop thinking about this as an all or nothing decision. You don't have to choose between keep your rate and be miserable or give up your rate and go broke. There are creative solutions that people just never consider. In upcoming videos, I'll show you exactly how each of these strategies work, the rental property approach, equity strategies, and creative financing options you may not be aware of. But first, you need to know your numbers. I've actually created a free calculator that shows you an estimated payment difference between staying and moving and using your equity and all the real costs. There's no email required, no sales pitch, just get the real math to help you decide. You'll find the link in the comments below. Put in your numbers and see what moving would actually cost you, not what you just think it costs. The people who feel good about their housing choices are the ones who make decisions based on facts and not fears. Get your facts, then decide. And if this changed how you think about your 3% mortgage, hit that subscribe button. Next week, I'm showing you exactly how to keep your 3% mortgage rate and move by turning your current house into a rental. I'm Jonathan Wilson, and I believe everyone deserves to have a fantastic mortgage experience, and that all starts with making informed decisions, not emotional ones. Thanks for watching.